a 12 billion euro deal with Adnoc and an icon in German industry, Covestro. Walk us through what got this deal across the finish line, given that it's been in the works for a year now.
Well, clearly, it's a part of our overall international growth strategy. Chemicals is a key pillar. We believe in the growth in chemicals over the long term. And for us, Covestro is a very solid company that has a lot of great fundamentals. They've invented the chemistry back in the 1930s. They have great innovations. They have over 8,000 patents. I mean, this company has a global footprint. And as such, as we got to know the company and build a relationship with the management, we really believe that this is a company that is one, world-class, global, has the right fundamentals, and hence we were able to come to this decision.
You mentioned the international strategy and the expansion from Adnoc's perspective. Before we dive into the details of that, I want to ask you a question that I think sparked in a lot of people's mind when they saw this deal cross the finish line, which is, why did the German government agree to this? And I ask this in the context of the fact that we have another major German deal that's seeing a lot of pushback from the government in the financial sector. Of course, UniCredit's stake in Commerzbank. Why do you think the German government said yes to this deal?
Well, for us, this is clearly a step change, transformative deal. It's a large deal. I think it's too early to say that all the approvals have been done. Today just marks a major milestone in our voluntary takeover offer. We are yet to go through the regulatory process, and that will take its own time after the voluntary takeover offer in the market. So I think we have great support from all the stakeholders in Germany. We believe in that market, but at the same time, we need to understand that Covestro is a truly global company. It has significant operations out of its 48 plants in North America, in Europe, as well as in Asia.
It's a fascinating one, and one that the markets are convinced will actually find all the approvals that it's seeking. Let's talk about the deal itself, though. The critics of this deal would say this was a fairly expensive one, that if you just look on a basis of a price to equity or price to earnings ratio, for example, it looks fairly costly at a time when the stake itself is something that the Covestro CEO said would be failing without further investment. How much investment is required to hold up this company?
I think we need to look at the chemicals as a cyclical business. So depending on which time of the market you enter, it can look differently. We always look through the cycle and not at the bottom or the top of the cycle. And that's the commodities business. So from that perspective, we see there is a lot of intrinsic value. This is a growth platform for us. It is a company that has all the fundamentals. And we need to keep in mind that Marcus has multiple hats, and as the head of the union and versus Covestro, he represents in the other hat over 1,200 companies. So I would really focus on the fundamentals of the business, the longevity of the business, and their ability to deliver value, which we believe is there.
You use a couple of key words there. Adnoc's international strategy, Covestro having this global presence, the fact that the UAE via Adnoc is really expanding and has their eyes on this global energy business. I'm curious of what that strategy looks like outside of Covestro. Are you looking at other deals in the States, in Europe?
So as a part of our approved strategy, we look at 3 international pillars. In line with our local value chain, we look at chemicals, and there are a number of verticals and some of these deals that have been announced and or in the works, such as our acquisition or the process of closing the Fertiglobe acquisition. Obviously, there have been talks around the polyolefins business, being the polypropylene, polyethylene business, and clearly Covestro. Those are all a part of our international chemical strategy. In line with our gas, we believe in gas to continue to grow to 2050. And as such, that's also a key pillar, as well as the low carbon energy. What we believe in is Covestro is that their strategy and ours dovetails really well. That took time to make sure that we build the trust, we build the common vision, and how we see the future. And I think as that happened, we both saw that there is value, and this is why we're here today.
Let's talk about another deal that's in the works from Adnoc, and in particular, you're looking to merge your stake in Borouge, I believe is how you say it, and Borealis. A lot of this was faced with some pushback as we were waiting for the result out of the Austrian elections. That is now in the rearview mirror. What's the latest on that?
We continue to have fruitful discussions in looking at this. Obviously, deals of this size, especially in mergers, and publicly traded companies, do take their own time. I know that the anticipation from the market is there. we believe that things are going in a very collaborative, positive manner.
You mentioned natural gas and LNG in particular. We know that the UAE and the Middle East broadly has been looking to create that global footprint at a time when even the United States is looking to expand that as well. I think even Greece is building terminals to receive some of that. Talk us through your LNG strategy as well, and whether or not this, in the long term, replaces the market share that oil has.
We believe in energy transition, and clearly there is a significant growth in the world needs for energy. We believe that gas will be one of those key pillars that will continue to grow. It can replace heavier carbon emission or intensity products or energy sources, and hence we see that investing as a reliable source of energy and a supplier of energy, we see an opportunity to continue to serve our customers and our markets through international gas. So from that perspective, it makes absolute sense to delivering our strategy, which is looking at low carbon footprint type energy that will serve the objectives around decarbonization, but at the same time providing the energy the world needs to operate.
That's the long-term view. Let's talk about one of the many other hats you wear, which is the head of energy trading business as well. Give us your view on the oil markets right now. I mean, there's so many cross currents here. What happens to oil, given the tensions you're seeing in the Middle East, of course, given the consumer slowdown in the United States, not to mention the issues in China's property sector as well? How does that amalgamate in your mind?
I wish I had the crystal ball.
That's your job.
No, I think it's, one, we believe the fundamentals are strong. The supply-demand fundamentals are very strong. Clearly, we need to also understand that the financial players within the oil markets and the sentiment around it can sway it one way or another, but that's a part of commodities. So we remain true to the fact that the world will need the energy. Low carbon energy will continue to be the main driver, and while we will go through the cycle, we will for sure be able to deliver on that energy to our customers. So prices will go up, they will come down, and that's what they do.
Oh, come on. Give us the juicy stuff. What's the price target by the end of the year?
I wish I knew.
Fair enough. Well, talk to us then about the long-term strategy again, perhaps not in terms of acquisitions, but specifically when it comes to the relationship with the United States. And I'm curious about this in the state of an election cycle and in the question of energy independence as well, which the U.S. has largely flagged, not to mention becoming an LNG exporting country for the first time in ages. Walk us through what that looks like. Are you looking at targets then in the United States as that business grows?
No, clearly, the U.S. market has a lot of growth. There is a lot of LNG projects that are happening there. We see them as a competitive source through Henry Hub and their ability and proximity to Europe. So we do see a lot of fundamentals that are for the U.S. in that market. But at the same time, we need to understand that the arbitrage window will allow cargoes to flow whatever way is required. So we will continue to be a disciplined investor. When the opportunities come at the right time, we will make that call, and we'll continue to make that call. And we see that there are a number of opportunities out there.
Well, a good chunk of the American energy landscape includes refinery deals. Is that an area of the energy sector you might consider?
I think the refining business goes through its own cycles. It has different fundamentals, especially with energy transition, EV, the pressures that are there, peak transportation fuels forecasts. I think we need to be looking at integration between refining and petchem for that to make some sense. Yet at the same time, if an opportunity comes where we see a lot of value, we would definitely make that call.
So a lot of international investors I'm going to circle back to how we started this conversation. A lot of international investors are looking at this $12 billion acquisition of Covestro from Adnoc and saying, what does it mean for a Middle Eastern company to be taking over such a big, pioneering European industrial company? What's the message? What should we be reading through?
I don't think that this is about a Middle Eastern company taking over a European company. This is about finding a partnership. We've been a company that has thrived on partnerships. We have a lot of European partners, Asian partners, American partners, and we've been able to work with partners for the last 50 plus years.
Yeah.
And we believe that's the magic sauce. So for us, we look at this transaction as a partnership with the company, its management, its employees, and the ecosystem that it operates in, and we need to create common value for both of us.
Adnoc has said they want to be a top 5 player in the chemical industry, in the market here. How does this fit in? How does this deal fit into that strategy?
So as a part of the chemical strategy, there are a number of pillars, right? And one of those pillars is polycarbonate polyurethanes. This is where Covestro is the target of discussion today. Today, Covestro is definitely one of the global leaders in this chemistry. They are able to serve, thousands of customers with over 10,000 specialty products. So as such, we see this as an innovative company that has a lot of fundamentals that will continue to serve everyone as we need materials in the future. And petrochemicals do have a key advantage on their carbon footprint vis-a-vis other alternatives. So we have a very strong view that with innovations, use of advanced technology and AI, and using and deploying and staying close to your customers, you will be able to continue to deliver value.
I imagine Covestro required some convincing in terms of the stake. Do you think the fact that this deal has now gone through opens the floodgates, perhaps, or makes the path easier for future deals?
We'll wait to see.